Loan applications and also lenders often experience long delays and inconvenience going through a loan application process. In a recent interview on Weekend Business Television, a bank loans officer commented that the customer has a better chance of success if all the required documentation is correct when provided initially. Even when an interview is conducted and an application made, the process cannot commence until all information is supplied. In a previous video we looked at identification documents. Let's move on to some other common problems and offer suggestions on how to streamline the process. We highly recommend a visit to the Australian Securities and Investment Commission Money Smart website before contemplating finance. It offers unbiased and appropriate guidance on all things money. Start by checking credit history. A free copy is available once a year if you can wait for 10 days. This will show if there are any mistakes which need to be fixed before the application. Lenders do not like credit defaults, no matter how small. If there are defaults and special circumstances are behind the default, talk to the potential lender about it before making the application. Don't make a series of online applications. This also shows on the credit check and can give the impression of trying many different lenders because applications are being rejected or some other problem exists. It may be a good idea to get pre-approval for a loan. You will know exactly what you can afford. This is especially relevant when attending auctions, as deposits can be lost if the price bid ends up being unaffordable. Take time to complete the loan application form and do not leave things out. For example, don't forget to include, say, a credit card that is rarely used or a small loan that's almost paid out. When the lender goes through their checking process, these sometimes forgotten items are shown, and non-disclosure could lead to delays or rejection of the application. Lenders are required by law to follow responsible lending obligations. In part, this means making inquiries and verifying capacity to repay the loan. Lenders often use what's termed 3 C's: character, capacity, and collateral. Character relates to credit reputation, capacity to cash flow or income stream, and collateral to assets or what equity is the borrower contributing to the transaction. Sometimes borrowers protest and avoid providing information required by the lender. This can alert the lender to possible issues, which can either lead to delays while further inquiries are made or to rejection of the application. The lender is under no obligation to provide finance and would rather reject an application than have a troublesome loan on their books. Punctuality. Appointments are time frame allocations. Turning up late can mean missing out on the allotted time and then the appointment is rescheduled. Missing time frames consistently can raise character issues. That is, will the borrower often be late or miss making loan repayments? When a property is found, make sure that the lender will take the property as security for a loan before contracts are signed. For example, some lenders will not lend against small units, mobile type housing, or rural properties. When you do sign a contract, make sure the details are correct. Delays often occur because names are spelt incorrectly, omitted, or when a contract is in a company name and the customer wants to borrow in personal names, or vice versa. If a company is to be involved in any part of the transaction, we strongly recommend talking to your accountant first to make sure the correct entity will be applying for the loan. Major delays can and do occur when obtaining company accounting documents, trust deeds, etc. It is extremely important to make sure who or what is borrowing, who or what will own the property and what it will be used for, and who or what will pay off the loan. And with company accounts, directors' guarantees may be involved, where guarantors are required to attend face-to-face interviews with the lender. If self-employed, and that usually means contractors, full financials are usually required. This means prepared by an accountant, the actual documents, not drafts or extracts, and in full, which means trading statement, profit and loss, balance sheet and notice of assessment. Make sure documents are current. There is no point in providing, say, an electricity account that's 12 months old or payslips from 6 months ago. Also, no point in providing a copy of a bank statement if it does not show full names of the account owner and the financial institution details. The lender needs to know what income and expenses are now and who they are dealing with. Provide the documents that the lender requests. If the lender requests payslips, don't provide bank statements showing pay deposits instead. The lender wants to know full details of your pay. For example, if overtime or penalty rates are included. Are deductions being made from your pay? Are tax debits being deducted from your pay? Do you salary sacrifice, etc.? If you are paid by commissions or if bonuses are a regular part of your income, the lender may request your last 2 years' tax returns and or group certificates. It is important to note too that any changes to the original loan application or pre-approval can equate to starting all over again. Good conduct of accounts during the pre-approval stage up until finding your property is also extremely important. If anything changes during the pre-approval period, for example, you take out a new debt, your pre-approval may be void if you can no longer afford repayments on the loan. Lenders will ask if there have been any changes. If you need help, give us a call. There's no sales pressure. We offer 2 different services. One is fee-based, where we will talk with you to help you understand loan checklist requirements. And the other is free referral-based. Visit our website www.advancedscan.com.au for further details.